Hello everybody, welcome to TraderMerlin Show for your Monday. I even have the 49er logo still on there. I gotta turn that one off, but happy Monday everybody. Holy crap, what a day in these markets. You talk about just tremendous moves. At the end of the day, for those who may not have seen the whole bounce up and down, there was actually a range in move on the Nasdaq that was over 10% today. We were down 4.9% at one moment, and all of a sudden we came screaming back up, ended in positive territory by just a little bit, which has a lot of people freaking out. I love it because I think it's opportunity. And of course, I had to throw in a little fun little picture here. The market meltdown continues, and I probably should have added a little extracurricular exclamation points or something, because today's move, to me, is actually pretty special. We'll talk more about that as we progress through today's show. Raiders, Thomasina, where are the Raiders in this playoff? I'm not quite sure. Did they make it? Well, we're down to 4, folks. And by the way, I know this is a financial market show, but if you're a sports fan, that was 4 of the best football games I have ever seen in my life, especially hat off to the Buffalo Bills fans. That was just an unbelievable game. Cheers to Kansas City, but I think Buffalo should have won that game. Anyway, yes, let's get rolling. Market meltdown, obviously in full effect, but is it done? Now, you guys may remember on this program, I've been talking about how when things really go to hell in a handbasket, so to speak, and they really just completely melt down, there's a certain point where it just becomes, it's either automated, and I've been waiting for that automated selling, and then you get that climactic volume spike where volume is incredibly high on a huge move down. That's what we had today. So let me show you some charts here just to drive that home. So here is the Nasdaq, the triple Qs, right? And if we looked at Friday's session, I want you guys to notice the volume on Friday's session. It wasn't that high, right? So that tells me that there's pain just because the candles are red and look like this, but we don't have a huge spike in volume. Yeah, come on, Don. You got to admit, you probably can't speak today, Don, because of how exciting that game was. That was the best 2 minutes of football. My goodness. What such a phenomenal turn of events, back and forth. But yeah, it was so great. Hey, Indigo, good to see you. It's all about the Rams and Niners next weekend, though. I may not be able to speak on Monday, so we'll pace myself for sure. All right, so obviously we have this massive candle today. I'm going to turn volume off for a second just so you guys can see without being disturbed. You know, we had these last couple of big down days, and one way that you can get a sense as to how people are panicking, the emotion, the fear, the greed, is obviously looking at the candles, but of course it's also looking at the shape of volume. And I'm going to do a little yellow box here, which just to kind of play around a little bit. You have to understand that one moment where this yellow box is right here, that was a giant red candle. This whole thing was just one giant red candle for the day. And it looked absolutely ugly, just ripping down. And then all of a sudden we have this just epic reversal. This is like the finish of the Bills-Chiefs game. I mean, it was just a legendary ending on all fronts from both teams playing almost perfectly, except for a couple defensive lapses. Some people may look at this and go, man, that is the mother of all hammers. I wouldn't call that a hammer formation personally, but I really love the way this finished. So not only do we have a huge pain point and then all of a sudden greed come in and buy this thing up, but when you throw volume on here, you know, now you get a sense as to capitulation. Right there, you can see a little bit better if I move it up, but volume way higher than normal today. So to me, I guess in a long story short here, what do I think is going to happen? I think you're going to get a follow-through rally over the next couple of days, probably rallying back up to that 200 period moving average, which is not too far away. There aren't any really great supply zones I see personally to draw people's attention to it. You know, so normally on a price chart like this, I'm going to be looking for where's that pullback moment going to be, right? Where's it going to head up to? Well, I mean, since it's been just pretty much decisively down, we really don't have much to choose from. There aren't any great supply levels. I mean, yeah, you've got, 388. Yeah, it's so far up there. Let's not worry about that one right now. So you have to ask yourself, what are other people going to be looking at, right? What are people going to be looking at? And they're going to be looking at the typical crutches that most new traders look at, which is moving averages. So I've got a 200 period moving average, and I got the 50. We could throw the 20 on here as well, but I think they're going to shoot for the 200 to bounce this thing back up. Now, to be honest, I do think that this is the beginning of the rollover. I know some of you are thinking, hey, there's going to be another melt up. We're going to hit all-time highs. I I think the high's in for the year. Let me ask you, I guess I can't do a poll in here, which really sucks, but I'll ask you, do you think that the high is in for the year or not? Yes or no? Just type it in the chat. I'm curious. I wish I could do a poll here. Maybe I can with some software upgrades, but do you think the high is in for the year? I'm putting myself in the camp that says the high is in for the year. I know you guys think it's going to all-time highs, but hey, we all have our opinions, and it's just kind of fun to see what you guys think and throw your chat in here. Hey, Chris, good to see you. Green line looks like a good supply on your chart. I'm colorblind, so I couldn't tell you which one's green. So Les says no, not in for the year. Margaret, Mike are saying yes. And don't let me sway you. Big Eb says nope, maybe in for the year. Oh yeah, of course, Thomasina. I mean, the markets are going to go higher than this in the course of time and decades down the road. But this, I think, is why it's interesting because we've got multiple people saying no, some saying yes. The truth is, don't know. Sue got it right. Don't know, and it's not that I don't care. I do care. Like, I would like to obviously have the goose that lays the golden egg and tell me what's going on. Don Franz, I don't know if it's in for the year, but not a chance in hell we hit an all-time high. All right. Cool. Capitulation day right now. So this is why I think it's important. When you look at different instruments, you can see kind of different pictures. Obviously, we see the climactic volume there on the Qs. There was a mention of, hey, you have a better hammer formation on the futures, and that's true. We do. You can also see that volume is significantly higher than normal. It's twofold. Number one is the climactic volume on these charts. And you notice it's there on the S&P. You can see it here. Let's throw on the Russell. The Russell having much higher normal volume as well. You have the Dow here. Also, I mean, it was one of those, like, I apologize for cursing on the show, but it's basically one of those days where a lot of the market participants went, holy shit, and freaked out for a second. And then all of a sudden, people who had dry powder, had money on the sidelines, I think gobbled this one up because, while I think the markets are wildly overvalued, there still is buying pressure. There still is the Fed supporting the markets. We still have rates at historic levels. So the catalyst is still there for those who are arguing that we're going to see a market melt up. So there you go. Your Russell level hit. Yeah. To the T, right? You notice we had this drawn out on the Russell. My charts are really acting wonky today. Oops, sorry, I don't even have the chart up. Here is your Russell. That was the target. And I think we talked about it. I said, it's still a ways down. We almost got to it on Friday, but, you hit right in that zone and ripped out on that one today. Nasdaq, I didn't have a level down that low mapped out because I didn't see anything that was really great over here. But all in all, I think you had some just incredible opportunities today. I did not expect there to be that quick of a reversal. It was a real fast one. So normally what you're going to get is a pop back up here. It's different for different markets. Bought Tesla in a yellow box. Hey, what did Tesla do today? Facebook was incredible. I don't know if you guys saw Facebook's rally today. I mean, that is a monster hammer. I'm going to turn volume off because it's a little bit annoying when it's at the bottom. But the Facebook intraday move today I thought was really special. Started off just drifting, and then, you went from 289 all the way up to 308. That's a pretty substantial move for Facebook. It was pretty ugly for most tech. Of course, we can see that by just looking at the Nasdaq as well. Just a huge move to the upside here. So, all in all, some great stuff. I'll do the opposite of whatever Jim Cramer says. Oh, speaking of, how about Netflix? This is Jim Cramer's buy from January 3rd. Told you to buy. It was down. It was down to 10% again today, and then it bounced back up. So let's go from the close on Friday to our low. Yeah, it was actually down about 11.5% today again. I love Jim Cramer. Hey, there's all kinds of different people in these marketplaces, so I'm glad he's there. I'm glad he does what he does. Let us learn from it. The thing with this Netflix right now is you've got a hammer formation on that as well. And I did get a question from somebody asking, said, hey, what are your thoughts about buying Netflix? Oh, man. I think you're playing with fire here because it seems for whatever reason it's falling out of grace. They're having fewer subscribers. You've got Jim Cramer telling you to buy it as a nice contrarian signal. I would follow the same rules I do for hammers, which is if it opens somewhere down below, 386, 87, and then rallies up through it, okay, maybe you start building a small position in that one and slowly, add to it. But right now, I think you'd definitely be going against the grain. It looks pretty damn ugly here for for Netflix, and I don't really see anything that would stop that pain because moves like this, these big gap downs, this liquidates portfolios. right? When you have something that goes from $520 all the way down to $400, you have people who are getting margin called, and they have a certain amount of days before they're forced to liquidate. I actually could gamble on Netflix earnings. Wow. You took a loss. Hey, you know what? I love humility. I love the fact that you're saying that you lost on that one. I don't for that reason. It's just too much. I call it the popcorn trade of the day. Actually, I think we actually did bring up the graphic that had this as our popcorn trade of the day last week, but apparently that was some stinky popcorn for you. You want Roku? Let's look at Roku, shall we? ROKU. The trend is your friend to the bend at the end, huh? I mean, Roku was up $500 or was at 500. Now it's at 157. And here's the sad part. A lot of these people, and it's not sounding condescending, but there's just a lot of people who might be new to the markets that look at a price of 157 and their brain instantly looks back up at this high from August or July and says, hey, it was 491. It doesn't have to get to 491 for me to be rich. I could just go from 157 to 350, right? And be killing it. It's going to get back there. Not necessarily. Not necessarily. This thing could just keep on drifting lower and lower and lower. Yeah, crazy chart. Love it. All right. I actually think that Jim Cramer blocked me, by the way, because I ripped on him a little bit. I was asking him, who pays him to make all of his bogus, crappy calls that end up costing people tons and tons of money. So I loved it. All right, let's see. So obviously, tons of pain in the marketplace today. One thing that was interesting is you did see some positive stuff out there to start with. Even gold was pretty much up all day, although I still don't see anything changing here. This is pretty similar to what we saw with Russell for like the last year, is it was stuck in a range. Now all of a sudden you have a wedge formation, a wedge kind of pattern, pennant formation here, which until it breaks out, I'm not overly excited. I got whacked on a little bit of silver today. All right, silver gap down, but still all holding it in this big sideways range here. Look at the margin it created. People say that. Well, I mean, you got to look at it from the perspective of people who have, let's say 2-to-1 overnight buy power in their accounts because that's FCC or SEC rules. All of a sudden they have a lot of paper profits and they're up 100%. They do get a lot of extra buying power. So if they scale in, they're stretching themselves a little bit thinner. The challenge only comes up if things drop real sharply, like we've seen in the market over the past week or so. That sharp drop is going to get people margined out, right? There is going to be some people that are forced liquidations because they stretch themselves too thin trying to capitalize on this big bull rally. So, we'll have to wait and see how hard this one drops. But right now, I think you're going to get a reversal. I think the next few days. MicroStrategy, is it a buy? I did buy a bunch of crypto today. What did I buy today? I have orders right now for Solana. I've got some more orders for Matic. I actually bought some more Matic. I have orders for Chainlink. I bought some Bitcoin, some Ethereum. But I do think you might see this thing go even lower and lower and lower. It's just not looking good. Oh, wow. Could MicroStrategy be a buy? It could be. Until you see cryptos really stabilize, I'd be careful. I think that you're kind of playing with fire here. The Bitcoin price chart, we talked about the 30,000 level. I still think it's in play. I don't think you're out of the woods yet, even though you have a great bounce happening right now. 30,000 to me is still a very logical target for this one and heading a little bit lower from these points. So be careful. I don't know if I would necessarily jump on MicroStrategy at this point. All right, what did I see in here? Okay, Roku. What else do I got? Oh, yeah, I know Curve. You know what's funny? So I know I'm digressing here in this way. The dangers of reading chat is all of a sudden you find yourself going down rabbit holes of certain things. One of the things that I do in the Crypto Investor Live program, for anybody who might want to know about it, is it's project analysis. And I took the same spreadsheet that I created, and it's kind of like, I don't know, maybe 30 different fields that you fill out so that you understand exactly what crypto you're buying. Curve, I just looked at Curve and I'm like, I know they have a lot of volume. I know they actually have a big dominant market share, but it has like a user interface created on a Commodore 64. To me, I don't know. I had Curve for a while and moved out of it, but let's just bring that one up for you here so we can see. We'll go Curve, CRV, and you want it against Tether. All right, so we'll just, I don't know if it'll give me KuCoins. Oh, there we go. Curve Tether on KuCoin. All right, so I added that one in. It's even on my list now. This is the same picture you're seeing for almost all the crypto. So it's not just that it's curved, right? It's almost everything looks like this, and it looks like a pretty big hammer formation forming on a lot of cryptos today, which, again, I think it's kind of following lockstep with the equity markets. There was a belief that was more of a hedge. Right now, I think you're seeing a lot of the pain that's being hit in crypto is simply because overall market panic and people freaking out a little bit trying to get capital. So, all in all, the chart looks okay. Like, I would be all right buying Curve if it breaks above these highs it established today. I just don't like the project. I'm not a fan of Curve Finance personally. Just I don't like Curve Finance. There's a lot of other ones out there I'd be more interested in. You'd be even better with something like, in my opinion, like a Uniswap or an Aave or some others. All right, let's see. What else do I have here? Merlin, do you still hold Cardano? I do. Yep, I hold Cardano. Actually, I was thinking about buying some more today, but I just like, I've got enough Cardano, and I don't really like the chart over the past couple of months, obviously. We're up over $3 now. We just broke $1. Not good for the long-term picture here for Cardano, for me anyway, but I am still holding mine. And you notice that there's kind of right we are at this exact moment really does line up with some critical levels going all the way back into 2020. After that, you look at it, drops going all the way down to 30 cents. I really hope that doesn't happen. I think they got too much of a team and developers and projects to see it go back down at 30 cents. But you never know. Markets operate in strange, crazy ways. Christina says, isn't that the opposite of what crypto was supposed to be? Well, I guess the question is, what was crypto supposed to be, right? I'm saying that somewhat sarcastically. What is it supposed to be, right? It was, at least from my perspective, if you ask me what crypto was supposed to be, I'd say it was a way for you to free yourselves from the constraints of traditional finance and investing in financial markets. So while it does accomplish that, it allows me to do things like yield farming and staking and earn interest on my income at far greater rates than banks, even in stable coins. It allows me to trade different markets using synthetic instruments. It allows me to trade currencies, all types of stuff like that. Does it necessarily make it a hedge? Now, I think Bitcoin should be more of a hedge against the market meltdown because it's not controlled by a central bank, but it's kind of following the way that the markets go. So it's just getting swept up with it. I still personally do think it's more of a hedge than some of the other cryptos. But it's just because it's just Bitcoin, right? It's not talking about all their smart contracts on the platform, et cetera. It was just about money as opposed to programmability. Pepper says, do you think the meltdown will have any effect on what the FOMC does Wednesday? No, I don't think so. I think the Fed has it pretty cut out for them. And I think what you'll see here is on Wednesday at the FOMC meeting, Powell will say, we're going to keep things, the rates are going to stay right where they're at. We're going to continue our tapering of mortgage-backed securities and treasuries. I think that'll be pretty standard boilerplate. And then he'll say, we are keeping a very close look on the economy. We want to make sure that those numbers are in line with our expectations and our targets. And we're also keeping an eye on inflation. We understand that the inflation readings have come out higher than expected, but we do believe that inflationary pressure will be alleviated once the supply chain disruptions are removed from the system. Now, we do understand also that COVID is in place, and COVID is certainly having an impact on our markets. And that's a wild card and something that's more challenging for us to figure out. Pretty much, I want to record this and play it back, because I bet you he's going to say 50% of what I said, he will say almost word for word. Now, what's more important is what he says at the press conference afterwards. And that will be a lot of clues as to what happens in March, right? I am of the opinion that in March, they're going to raise rates. Now, we have another CPI reading that's going to come out before then. I think we actually have 2 CPI readings. But remember, the one that comes out Friday, the PCE Core Price Index, that is the one the Fed uses. And that one has been spiking. And if those numbers spike real high, the talk track will change. Now, unfortunately, the meeting is Wednesday, and that announcement for inflation comes out Friday. So we won't get a chance to see that data. Now, my guess is Powell already knows what that piece of inflationary data is going to look like. I do have a speech memorized, Drew. I've been listening to this stuff for 25 years, and I got to listen to some people that didn't say a damn word. Greenspan would just babble on until the senator's like, okay, whatever you said, bro, I have no idea. To now we have pretty full transparency. So it's pretty fun. All right. Hoping Russia bans crypto so we get another pop upward. Yeah, ban it. Let's do it. Hey, Berto. Good to see you. Yeah, it should be a fun one tomorrow in the crypto sessions. Let's see. So I'm going to go through a couple different questions here, and some are going to be a little more challenging than others. Eric saw this one on Friday as I skipped through it, so we'll address this one today. He says, during the last 18 months, I've been selling puts and calls, primarily IRA accounts and cash accounts. I started with primarily selling equity ETFs like IWM, triple Qs, puts. Eventually, last 12 plus months, this has morphed into selling specific stock puts like Microsoft, AMD, Ulta, Boeing, etc. When it's near Jeff Manson's picture perfect zones, when possible, and selling IWM and QQQ during earning release months. This process has worked fairly well for me during this run. Now with the markets beginning to turn, I heard you mention buying puts instead of selling. I have not had any bought any puts before, as I have both IRAs and cash accounts. Can you share your strategies on picking your buy strikes and contract timeframes? Well, I'll keep it somewhat simple. So I don't really have any specific rules as far as the strike prices. It's generally going to be I'm looking for supply and demand zones on that price chart. The only real strict rules I have are time. If you're selling puts, 30 days or less. If you're buying puts, 90 days or more. Now, the longer you go, the more you're going to be paying. You're paying for time value of those options. But if this market does in fact melt down, and if you bought puts, I know Big Eb, and I think Tom, you had some too, but you got out of them a little early. You're going to pay a pretty penny for some of those puts when the markets are tanking like they are right now. But if you had them a month ago, they were cheap. Markets all-time highs. Things were looking rosy. Put options were pretty cheap. And the percentage rate of return that one would have enjoyed in that small window of time between, let's say, a month or so ago to where we are right now, you're probably looking at easily 100% rate of return on your options, depending on the strike price that you purchase. So the big challenge I have, and Eric, this is one that you're just going to have to kind of figure out for yourself, is what is your overall thought on the long-term move of the market? Now, long-term, we're talking decades, market's going higher. But in the short term, could we have a 50% drawdown in the market? I absolutely believe we could. We had one in 2000. We had one in 2008. So, they do happen. The question for you is, when you look at the two options, no pun intended, but you have choices here. You can sell puts, you can sell puts or you can buy puts, right? If you're selling puts, you're basically saying, I think it's going to go down, but not too far. It's going to go down to this point. And if it does, great, I want to own it there anyway. When you're buying puts, you're basically saying, I think this thing's going to go down a lot more. Now, the challenge for anybody is when you sell puts, you're actually collecting money, right? You're bringing in money. When you're buying puts, you're paying that money. So if the market doesn't do what you think it's going to do, you could potentially lose your entire investment. Whereas if you're selling puts, you collect premium and you may never actually have to own that stock. So I'm debating that right now. I'll kind of see what happens over the next couple days. I was just about to pull the trigger and sell a bunch of puts today, but I went, I just don't know if I want to be selling. So what I ideally like to have happen is I'd like to see this market rally back up. I'll use the S&P as an example. I'd like to see the S&P rally up to 4,500 again, which is not that far away. You can see that's just a couple, how many percentage points. Let's see, that is going to be about 2%, right? It's about 2% from current levels. And if we get a rally up there to 4,500, I will probably be buying puts that are going to be going out into probably April, May, maybe not June, but around, it's January right now. You're at the end, so you got to go February, March, April. Now you're looking at 3 months. So April or May is probably where I'll be buying those to give myself enough time. And because the markets, if I do execute it at 4,500, they will have rallied enough so that the premium that I'm going to be paying is a lot less. Now, what strikes? Well, I guess that really depends on what rate of return I'll be getting. Because, you look at this lows that we just broke today, right around 42.50. Well, that might be one area, but I think that those are going to be, they're going to be really expensive options, and we could probably hit that in a month. So, maybe I'll be going to the 4,000s, which are going to be below this that area of demand that goes all the way back into May. You guys can see it way back here. Let's just do this. Right, so maybe I'll be looking at a strike price right around 4,000, or I'll be doing them on the SPY. So looking at this strike price at the 400, and I'll bring that up for you guys here so you can see it. But I need to wait and see what those numbers look like. Here's where my cursor is at, is 400. I can move these lines now. There you go. So that's going to be below this kind of little pocket that we saw back in May of 2021. and see if the premium is worth it for me, or if I can get a decent deal on them, I can get those puts for a good price. We could very easily see ourselves at 4,000 by April, right? I don't think that's far out of anybody's stretch of the imagination. I mean, how far would that have to be? Well, let me just do this, move this one down. That'd be a drop. Oh, sorry, from the lows. Let's go to the drop of current price. That'd be a drop of about 8%, right? Almost 9%. I mean, look, we've done that in the last week. I mean, we're down almost 13% right now since those peaks just a couple of weeks ago. So it could definitely happen, but it really depends on what happens at the time that I decide to buy those puts. But yes, I am shifting of moving and taking more of a buy some put position. You guys remember back last year when we started to have our bounce out of COVID, in here, I was in 420 puts. Crazy. Those they didn't expire worthless because I closed them out before expiration, but took a pretty substantial loss on that one. And good thing, because I would have lost the total value of that position had I kept it open. But do we get another similar move? Give me a nice little bounce up here, and then maybe we crater down to that 400 mark. Great, let's do it. Talk Monkey says lots of put volume pointing mid-February to 400. Good. But what'll skew all that is if we get a big spike up. If we get a big spike up over the next couple days and erase this kind of panic moment, what happens, and this is so beautiful about the markets, is all these people who freaked out and just threw everything away and said, okay, I'm done, unload, get me out, they're going to come jumping back in thinking we're going to have another run at all-time highs. That's what I'm going to try to short. I do think that the highs are in for the year. I just feel like there's just too much negative stuff coming down the pipeline. There's no kumbaya moment where the whole world's going to get together and say, hey, kumbaya, we all solved world peace and we're all going to get along and economies are great for everybody, right? Yeah, no. You've artificially inflated these markets and there's going to be a lot of pain going forward. So, Merlin, did you close your SPY positions today or sell calls in them? I kept it open. Trust me, Big Ab, it was one of these things. I have all my choices for those SPY, or for those that don't know what Big Ab is referencing, I had SPY puts at 450. And obviously you can see it rip through on Thursday, Friday, they were put to me. So, today, I was busy working on content, so I didn't get a chance to focus on too much, but I was looking at it going, on one contract, down around almost $3,000. That's not good. And then things started to turn, so I've got a stop loss in place at 418. I'll move that up tomorrow, probably a little bit higher just in case. But I didn't sell calls on them. I was thinking of selling some covered calls, but the risk there is, Big Ab, if you sell a covered call, then I'm kind of locked into that. And is it worth it for me to try to make, let's say, $500 or maybe $1,000 by selling those calls at, current price would be the best option. And then all of a sudden, the market falls apart again, and I'm stuck in something that's down 15%. But hey, I collected that $1,000 on the calls. To me, that makes it a little bit more, a little more tricky. So I decided to just hold the SPY. I didn't sell any calls, didn't buy any puts on it. But I will let you know. My target is to get it back up to 450, and then once that happens, I'll probably just close it out. I mean, my end price is 448 on it after everything. All right, who made that green candle? Us. Us. One green candle and fear is out the window. No, it's not. Fear's not out the window. But you know how it is, Don. The markets are reacting to momentum. So, right, what'll happen is even though the markets are down huge today at one point, the end story was, hey, markets finished strong and everything was looking great, which brings in a whole bunch of new investors, which normally will give you another, a day or so of nice movement. And who knows? Like I say, we could challenge all-time highs, but I just don't see it happen. Give me a little more bounce. Oh yeah. Okay. So check this one out. So Rob sent this picture in. Let me show you this. We may all have to. Do I have it here? Oh damn it! I thought I had it. There it is. You may not be able to see this one very clearly, so I will. I'll show you this. And I just threw it in real quick into my PowerPoint slides, but bear with me. I want you guys to notice when this is from. And Rob, I'm telling you, I'm serious, man. If we get this again, I will throw a bunch of money at it. Seriously. Because for 2 weeks or 2 times in a row, he's pointed out something on these charts, which has been interesting. So here's the triple Qs. I'm going to try to zoom in a little bit so you guys can see it. And I'm going to go to get rid of that stuff. Okay. So notice at the bottom of your chart, you see the date. This is from Friday. Oh, you got to be kidding me. Come on. There it is. There it goes. So down here's the date at the bottom. The 20th was, no, sorry, the 20th was Thursday. So on Thursday, it was kind of interesting. Notice where it said the market was at on Thursday. 335 on the Qs. But you see there's no volume here. You see there's like no candle right there. So this is just some weird print. And I responded to Rob. I said, hey, listen, I think that there, it could be that market makers or institutions are signaling. I have seen this before. I was on the floor of a market maker in Texas, and they would signal to each other. They're not allowed to. That would be illegal for them to do so. But clearly something happened. You guys can see this crazy wick. Look at this thing. Monster wick. It never traded here on Thursday. Never. And then you fast forward to Friday. Didn't trade there, right? And then you look fast forward through today. Hold on. I'll bring it up. Here's today. Let's go to the triple Qs. And remember, it was 435. It hit 434. I mean, it's crazy. It's crazy. It's almost like you have this little window into the future, And awesome. I next time you see that one, Rob, you let me know, and I will. I'll put my money on that one. It's worth it. How would you have played this? Well, if you saw this crazy weird anomaly print that goes all the way down to 335, that was 7% down. So fine, you just buy some puts or plan your trade accordingly around 335. I thought it was pretty crazy to see those results where you had it on your chart. And hey, I don't know who's using the platform over there, but if they are signaling somehow and you kind of catch wind of that, probably shouldn't tell anybody. Right, Rob? If you see any more, man, let me know. I think it was Ameritrade, right? Was it Ameritrade, Rob? I think we had it on Ameritrade. All right. Yeah, that was a cool one, man. It was really interesting to see, almost to the T. At least you're scratching your head going, wait a minute, were you signaling? So these, just so you guys know, brokers have systems in place where they're not allowed to talk to each other and really communicate with outside brokers because they're worried that they'll collude and work together. So say, for example, every one of you you're all my buddies, right? We're all in the same fraternity. Well, maybe we got some sorority girls in here too. So you're a sister sorority, right? So let's say, for example, we were all in the same fraternity and we all go out golfing. We're all really good friends. We work at totally different firms, right? Big Ed might work for Goldman. Don's over there working for, JP Morgan, whatever. And if I was to call Don and say, hey, let's tank Nasdaq tomorrow down to 335 and then we'll take it up, I'm going to go to jail if I get caught. No doubt about it. So if I wanted to, I could do things that would allow Don and Big Eb and anyone else who was part of our CliK or group to do that. So basically, he could say to his buddies, hey, listen, if you see ticks on the QQQs through Ameritrade, and maybe it's somebody that's working on Ameritrade because I didn't see these prints anywhere else. Let me show you here real quick. Let's go to a 5-minute. Because that's what that chart was. That was a daily chart. No, it's a what time frame was that chart? Wow, how was it that hard to see what kind of time frame? I think it was a 5-minute chart, 5 or 15. So I'll do 5-minute chart here. We'll go down and change to regular hours, so you can see the extended hours trading. And notice I'm going to scroll right back to the 20th. And notice there's no price that goes down to 335. On this day, right? This is where it would be. And we didn't get it. So I could create a system where only you and I knew, look at here, and if you see it on the app for Ameritrade, then you'll know where we're going. I'd do it. Hell yeah, wouldn't you? Yep, I agree. My TradeStation makes candles like that all the time, but they generally only show up for a day or two. So what happens a lot of times, just so everybody knows, how do prints like this happen, right? Well, 1 second. So there's a couple ways this happens. The main way is latent prints, something that's stuck in the system, right? So a lot of times what you'll get is the chart looks like this, and where's my pen? Earlier in this candle over here, maybe down here. Oh, you gotta be kidding me! Stupid thing. Maybe this candle had a wick that went all the way down to here as well, right? So what happens is sometimes this trade here it's just a late print, gets stuck in the system, And then all of a sudden, hours later, or the next day, it gets put through the system and creates these really weird, completely skewed events. It's just very, very, very suspect that 335 was the number that was flashed on this account, and then all of a sudden, 5 days later, markets open up and we hit that almost to the T. That was really, really, I see it all. I see it quite a bit. Normally, they're just outlier latent prints that someone just deletes. Yep. I do remember the GDX one as well. Yep. That was the first one. The Qs are the one I could have made a lot more money on. But next one, Rob. Flood my inbox with that crap. Tell me what's going on. And you got to be careful with that type of stuff too. But, if you can find, I think we all agree that behind the scenes, there's so much illegal crap going on in the financial markets. There's stuff that the SEC just cannot track. And if there's a way for a big institution to game the system with high probability and not get caught, do you think they're going to do it? Absolutely. Goldman gets caught every couple of years for doing something bad. I think they paid $1 billion fine one time. This is like 5 or 6 years ago. Let me bring it up because, I don't want to be, you're talking out your butt, Merlin, not happening. Let's see, Goldman Sachs, $1 billion fine. Oh, okay. Well, I'm sorry. I was wrong. Goldman Sachs fined record $2.9 billion to resolve one MDB bribery scheme, right? So, these guys are paying tons and tons of fines, but they know that they're pretty much not going to get caught. And if they do, they paid $2.9 billion for this bribery thing, but they probably made $50 billion off of it, right? And I made this analogy before. It's kind of like you go into the grocery store and you just steal a Snickers bar, right? You shoplift. It's only worth $1. But when you get busted, they go, you got to pay the counter 10 cents and we're going to slap you on the wrist. It's like, wait a minute. I stole something worth $1. I only get 10-cent penalty and nothing really happens to me? Well, I'll see you tomorrow. I'm bringing a backpack and I'm taking cases of candy out of here, right? Just the crazy part about financial markets. Look at my inbox. All right, let me check out my inbox. See what he just sent me. The tough part is doing this live, Rob. Is doing it live. Let's see. I don't get any new ones. I may have to do it for tomorrow's show just because I want to keep going. Oh, he's got a whole bunch of new ones. Did it say? Okay, so he said he got TD Ameritrade. You can see it firsthand. Which would be awesome. You can bust it. Yeah, I don't have my login, my stuff for Ameritrade. I barely use my Ameritrade account. But let's see. There's the IW. You have EMA. What else we got here? Bringing them up. There's the Nasdaq. I'll have to look at these ones after. I don't want to now the show gets all wonky if I do that. Oh, cool. Awesome. There you go. So yeah, send it to, I'll see if I can add him in there. Awesome. All right. I agree, right, Don? They wouldn't bat an eye. Oh, man. And don't think that they're high and mighty. They're about one thing, and that's making money. Period. All right, cool. Let me go into a couple other questions here just so I can make sure I roll through those. I got to wrap up some things here. Fibonacci for trading. No, let's go back. Les, you had a couple really good. There's one I really wanted to get to from Les. We kind of talked about this one already, which was, just quick. Would you have any comment on today's ESNQYM candle? Yeah, absolutely, Les. And you saw what I was looking at. I'm really interested in them. I think that on the daily time frame, which I'll bring here in just a second for you guys to see. And there is my chart for you guys. You look at them. It's not really a hammer formation, but this is a very bullish setup. Like Don says, there's a crap ton of people that were buying puts in here. How do we know they were buying puts? Look at the VIX. Remember, VIX is simply the ratio between put buying and call buying. So basically, people were buying puts like crazy today, and then all of a sudden the market's ripped the other way. Basically, the market's saying, oh yeah, you're buying protection? Well, screw you, I'm going to make it worthless by the end of the day. So anybody who bought puts today, the value just evaporated out of them because of this market rally. So, you got a huge shooting star on VIX. Don't worry, I'm not trading the shooting star from a VIX perspective. But I think that all these, you have the YM, here's your Dow with a gorgeous hammer on the futures. You have the Russell, it's a little bit better, even though it was into demand, which to me is two things, right? If you were watching this and saw the opportunity, you could have bought when it came down into this demand zone. And if it rallies up, you can start adding more to this position. Now, granted, I don't think that this is going to have a huge rally. I don't think it's going to have a huge rally. I think it's just going to rally back up to some supplies and give us some more shorting opportunities. But yes, Les, I like all of those. I showed you the Dow. I showed you, you wanted the Nasdaq. Same thing. Nasdaq's got a hammer formation. S&P as well. So momentum to me is clearly the side of the buyers. And we'll see how this transpires in the after hours, but I think it's already moving up. What else did I have? Les, it's a second question from Les. He says, with the shooting star for you to use it for trading in an uptrend, does it have to be the next candle to trade below the range? Nope. It doesn't have to be the first one. So for example, if we look at this chart here on the S&P, right? If I get another small little spinning top right here, that doesn't mean that this candle is no longer valid, right? It's just if it breaks above, that's what I'm looking for. So if it's down here tomorrow and next day it stays there, but the third day it rips up above this line, great. And the easiest thing you can do is just, let's just move this blue line down, is put your line across the top. Now, if you use a platform like TradingView or Ameritrade, they all have a feature where I think you can just double click on it, or maybe it's a right mouse click, and you can set alerts, right? So set alert. Add alert to the horizontal line, and I can have it email me or text me or whatever, flash on the screen, and then you can be alerted so you don't have to sit in front of it and wait for it. But yes, love it, Les. I think that there's some great opportunity out there in those markets for hammer patterns and shooting stars, but it doesn't have to be the next candle. It could be a day or two later. Last one, and then I got to get out of here. Mike says, is Bitcoin making an island bottom reversal today or a strong spinning top reversal pattern? Well, if you go to Bitcoin, let's bring this one up. It wouldn't necessarily be an island reversal, right? So for my opinion, an island reversal has to be an island of price. It cannot be touching other pieces of price. And the reason that you're never going to really get an island reversal with something like Bitcoin is because Bitcoin doesn't close, right? So you're not going to have the opportunity for it to have a reversal pattern. Now let me see if I can draw on this and show you what I'm talking about. Okay, so don't worry about the weekly performance numbers here. I don't have, there's blank screen right there. Perfect. All right, so now I will, as I was scrolling through all kinds of stuff. All right, so let's say you had your shooting star, which was the example that you wanted, right? God, this stupid platform. That's all I want. Here's your shooting star, right? If it does a spinning top over here, and then you got a nice little candle there, it doesn't matter. I'm just waiting for the break there. Done. Simple, easy. Same thing for a hammer, right? You just got your hammer down here with the long bottoming tail. After a downtrend, this would be preferably after an uptrend, right? So basically the same thing. I'm just putting a line across here, and I don't care what it does. Blah, 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 blah. You can do this. But if all of a sudden it breaks above it, now I'm interested again. Now, if it did like this bottom example and had all kinds of candles in here, obviously this is not as powerful, right? It's really important because if this hammer formation is at the bottom of a downtrend, it's signaling that the buying pressure came in. And if the buying pressure is really there, it should happen over the next day. It should be the next day. So like tomorrow, we should see follow through from today's substantial end of market rally. If we don't get that follow through, I think we got some problems. Yeah, I got it now. Yeah. Oh, you're in the Bitcoin. So the Bitcoin island reversal is the same thing. Oops, not intro. An island reversal would be where you have a candle like this, right? And let's say it's drifting down in the case of Bitcoin, and then all of a sudden you have it like this. Right? You can have some tails on here if you want, but notice that there's this gap between. That's an island reversal. It's an island. It's all by itself. Right? You get some water can flow through here. And then normally what happens is it jumps back up and then you get these big moves. So that's an island reversal. So I don't see an island reversal on Bitcoin right now. It's impossible because it trades 24 hours a day. It's just not gonna happen. But, is this a reversal pattern? At this point, I would say no. I would say right now, I think you kind of just got to wait and see. The momentum here is too strong, negative for Bitcoin and all of crypto. So I would be unless you are like me and have a much longer term perspective I probably would wait to buy crypto. I mean, I did buy a bunch over the past few days. But right now, if you're thinking about jumping in because it's going to reverse, I think you got more downside movement. All right, last one. What was he? NJ Baidu. All right, there's our Baidu chart, which really, this looks good, but it really looks like crap, doesn't it? I mean, come on. This hasn't done much. It's been stuck in this range for quite some time. I mean, you've got a great yellow box in this bad boy. And you're near the bottom of it. So from that perspective, I wouldn't be doing anything with Baidu. Even though I actually like Baidu as a company and I like Alibaba as a company, both of these have not been the best. I think a lot of it has to do with supply chain disruption. Oh, NJ, thank you very much. Appreciate that. But yeah, I wouldn't touch this right now. I would just, and you're kind of near the middle, lower end of the range. So, maybe you buy once it gets down to this lower part of the range, 135, but not really anything exciting about. What's Baba doing? Oh, still drifting down. We talked about this in a few months back, and it was like, the trend is your friend. It still is, my friend, to the south side. Yep, I agree, Roberto. I think 30K is where we're headed. Yeah. All right. I did not take the time today to, not that I didn't take the time. I've just been really dang busy with all the stuff I'm doing. So I didn't take time to get all your economics and calendars set up for today. So I apologize about that. By the way, there's massive amounts of companies reporting this week. It's 460 or something like that. Tomorrow, after close, you have Microsoft, you have General Electric are the two big ones that I remember. But there's, let's see, Johnson & Johnson, Lockheed Martin, and a couple others. But the big one that you need to watch out for is Microsoft. I know some of you are probably trying to play that earnings announcement, but here's what you have on the chart for Microsoft. Be careful. All right, so there's your Microsoft. Huge hammer formation. Actually went down below this area. I would have used this as my demand zone to be buying out of, but it just didn't stop there. But had a nice pop to the upside. My email? Oh, my email. Right there, TraderMerlin@gmail.com is the easy way to get in touch with me. If you have any comments or questions, of course, I see a lot of new names here, so if we have some new people, hit that subscribe button, and you can always send me comments, questions, feedback, whatever you like at TraderMerlin@gmail.com. And because Talking Monkey wants this one, let's go have a nice cup of Joe. SBUX. God, bloodletting. Talk about a bloodbath. As much as I like Starbucks, I just looks pretty bad. And the main reason I say it looks pretty bad is just because as this market was just ripping and establishing all-time highs, Starbucks was just kind of slowly drifting down, right? You saw this slowly peak July of last year, and then it's been making lower highs, lower lows, followed by this aggressive sell-off from 116 down to 95. There is a gap here that for those who follow me, know I'm a huge fan of gaps filling, and that's right at $90. So I'd be careful on this one. Yes, you did have a nice bounce today, but remember, everything bounced. If it didn't bounce today, it was broken, like crude oil and Bitcoin. So, yeah, I don't know. I'm not really that confident on Starbucks for any sort of long-term play. It looks to me like it's going to be going down. 90 seems like the logical target. You got some areas right at 95, which might be pretty good also. But if you look at any sort of trend indicator, right? Oh, here comes our friendly Russian trying to spam us with X-rated stuff. Bye, comrade. All right, we got rid of Mapenya. If we add on, let's say, 20-period moving average, you're below that 20-period moving average by a good margin. If you add on, that's the 200. If you add on the 20, you're below it. If you add on everything right now is pointing down, which, is definitely showing negative pressure for Starbucks. So at this point, if I had to say what do I think is going to happen, I think you'll get a bounce back up. Probably come into supply, maybe 104, and then I think you'll see it start to drift back down. But yeah, not looking good on Starbucks, unfortunately. Okay. Oh, earnings is tomorrow? I didn't know there were. I don't think Starbucks was tomorrow. No, maybe. Maybe my earnings calendar is all screwed up. I could have sworn it was this week, but I didn't think it was tomorrow. Let's see if I can get the. Bring up some earnings calendar for you. Sometimes it'll tell me updated January 24th. It doesn't tell me the date. It's so annoying. They only tell you after it comes out. Oh, cool. Well, if they have earnings tomorrow, going to be a wild one. I'll check that one after the show today. All right, guys, that's going to do it for me. I got to run. I got too much stuff to take care of here. I'm going to actually try to redo my studio again because I'm having light issues. You guys can see I'm really hot on this side over here, so I got to fix some lighting stuff here. Hey, good to see you, Chase. Awesome. I appreciate your support as well. Good to have you back. February 1st. Okay, thank you. Margaret, my assistant over there, helping out. All right, guys, that's going to do it for me. I got to run. Should be a fun day tomorrow. I'm looking for some bullish upside moves. If I get them, I'll probably have a good day and be smiling. We'll see. If you guys have comments, questions, feedback, things you'd like to comment on, email me, TraderMerlin@gmail.com. Of course, you can all see my... did you guys see my Twitter or my Twitter post? I thought that was really humorous. I couldn't resist. I am, as you guys may know, as much as you say he's the greatest quarterback ever, I just, for some reason, cannot stand Tom Brady. Still can't do it. So here's my post from yesterday, or today. There you go. I marked myself safe from having to watch Tom Brady in another Super Bowl. All right, that's going to do it for me, everybody. Have a fantastic day. I will see you all tomorrow. Send comments, questions, feedback, TraderMerlin@gmail.com. Until then, happy trading. I'll see you tomorrow.